A mortgage is one of the largest and most significant financial decisions many people will make in their lives. The process of obtaining a mortgage loan can be complex, and one of the critical factors in securing a mortgage loan is your credit score. Mortgage credit scores are used by lenders to determine the level of risk that a borrower poses and to determine the interest rate that will be charged on the mortgage loan. In this video, we will explore mortgage credit scores and the top 5 things you can do to increase your credit score. Mortgage credit scores. Mortgage credit scores are a specific type of credit score that is used by lenders when considering mortgage loan applications. These scores are calculated using a specific formula and take into account factors such as payment history, credit utilization, length of credit history, and types of credit used. Mortgage credit scores typically range from 300 to 850, with higher scores indicating a lower level of risk for the lender. Here are the top 5 hacks to improve your credit score. 1. Pay your bills on time. Payment history makes up 35% of your credit score, making it the most significant factor affecting your score. Late payments can have a negative impact on your credit score, so it's crucial to make timely payments every month. Setting up automatic payments or reminders can help you ensure you never miss a payment. 2. Keep your credit utilization low. Credit utilization, or the amount of credit you're using compared to your total credit limit, accounts for 30% of your credit score. Keeping your credit utilization under 30% can help improve your credit score. For example, if you have a $10,000 credit limit, you should aim to keep your balance under $3,000. 3. Don't close old credit accounts. The length of your credit history accounts for 15% of your credit score. Closing old credit accounts can lower your credit score as it shortens your credit history. Keeping your old credit accounts open, even if you don't use them, can help improve your credit score. 4. Check your credit report for errors. Errors on your credit report can hurt your credit score. Therefore, it's crucial to check your credit report regularly for errors and have them corrected. You can get a free credit report from each of the 3 credit bureaus, Experian, TransUnion, and Equifax, every year. 5. Use a credit monitoring service. A credit monitoring service can help you keep track of your credit score and notify you of any changes. This can help you stay on top of your credit and identify potential fraud or errors before they affect your credit score. Improving your credit score takes time and effort, but it's worth it in the long run. By following these hacks, you can improve your credit score and open up new opportunities for yourself.